Tuesday, November 19th, 2019, Maneco 64, home of alternative economics and contrarian views. A lot of speculation as to why President Trump requested Fed Chairman Jay Powell to go and visit him yesterday in the White House with U.S. Treasury Secretary Mnuchin. Some people think it's because he's preparing the markets for a no deal in the trade negotiations, that the trade negotiations are not going well. I personally think maybe they're discussing some forecasts by the New York Fed and the Atlanta Fed, where those two institutions see U.S. GDP tumbling in the fourth quarter. They've revised it so far from a forecast of above 1% a few weeks or months ago to now just 0.3% year on year for the Atlanta Fed and 0.39 for the New York Fed. Of course, the St. Louis Fed is forecasting higher at 1.5%, so it could be something completely different. President Trump, of course, said that they discussed everything. They even discussed negative interest rates, right? We all know that negative interest rates actually don't do the economy any good. If you look at Japan, who's had negative interest rates for over 20 years or zero rates. If you look at the EU as well, their banking systems are in trouble. All that does is hurt financial institutions because banks fund themselves through borrowing and lending, right? They can borrow very cheaply or get paid to borrow, but their margins shrink. I was listening to a Wolf Street report by Wolf Richter. He was talking about how the Japanese banks are 90% below their high from 30 years ago, and the European banks are 70%. So I don't think that would be a good thing for the United States, negative rates, but we'll have to see. Of course, the next Fed meeting is December 10th and 11th. There is very little expectation in the markets of a rate cut on that day, on December 11th. It's a two-day meeting. As you can see here from daily FX, Fed rate cut timing pushed back further. According to Fed funds rate, there's now a 5% chance of a 25 basis point rate cut at the December Fed meeting, or a 95% chance of no change in interest rates. So yeah, we've got about 20 days or about 3 weeks until that FOMC meeting. A lot could change in 3 weeks as it pertains to trade, right? As it pertains to the economy and the data. We'll have a non-farm payroll before that, right? And other data coming out. The other thing I saw is that a headline on Zero Hedge yesterday about how China is actually saying that the US and the UK are blatantly interfering in Hong Kong. So that could be a problem as well for the trade negotiations. If you're trying to negotiate with a country and the other country is trying to disrupt law and order in your country, that's not a good thing. It seems to me that there's been a ratcheting up of the good guys, bad guys here between both countries. I'm not sure what the situation is in China, but it must be the same. They're complaining about the Americans and vice versa. I see a lot of people blaming China for everything, calling them communists, talking about, right, but I'm not here to do that. The only thing that could have an impact in terms of things in general, I would say, is that they're leading us to a hot war, right? You've got the currency wars, then you've got you try to settle it through a trade negotiations, then you get the trade war, right? And if the trade war doesn't work, you go and fight physically, kinetically. Hopefully that's not the case, right? So that's what's happening out there. As I said, I personally think there's worries about the U.S. economy. Maybe the trade is in the back of the mind of the president, and he wanted to warn the Fed. So it'll be interesting to see what this expectation of rate cuts are going to be in the next 3 weeks in the markets through the Fed funds futures. So let's look at the markets. It's quite early this morning. Yeah, even though the markets didn't move that much, the stock markets, we made all-time highs, right? It's very, even if we just move up 10 points in the Dow, it's a new all-time high because the market doesn't seem to correct down anymore, and we are at all-time highs. Before I go into the markets, I want to show you a chart I've been showing my viewers for the last couple of years or so, and it's a almost 100-year chart. This is a monthly one, and it's logarithmic chart, so it smooths out the move up in the Dow. This is the Dow Jones Industrial Average going back to 1920, and I've looked at this trend line many times before, and up until the beginning of this year, for example, the top of that trend line, let's see, was about 29,000 a year ago when I started, over a year ago when I started looking at that. We were looking at 28,000 as the top of that line. But as that line is upward sloping, as you can see, the target moves. So right now, this is a monthly chart. The top of that trend line comes at 30,000. There might be a magnet out there for that level, 30,000. I wonder if anyone watches this chart apart from me. Maybe the PPT or the Fed watch this. But yeah, it's getting very interesting in terms of that chart. So yeah, 30,000 is easily achievable before the end of the year, especially the Fed changes its mind and cuts rates in 3 weeks' time. Is this a sign of a great economy? I don't think so. I think it's a sign of the Fed injecting heroin into the market. The Fed has injected about 289 billion into the market since the end of August through their QE and repo operations. That's how much their balance sheet is increased by. Well, that equates to even more in the markets because the banks and the financial institutions that receive that largesse, they leverage that 5 or 10 times. So you do the maths. This is more like injecting 1 to 3 trillion into the markets. So it's no wonder that the Dow is going up. It's no wonder that safe haven assets like precious metals haven't done well. How long they can keep doing that is difficult to ascertain, right? They'll be able to keep doing this kind of stuff until they can't. That's the only thing I can say. So let's quickly look at the markets here before I finish off. So it's 7:20 a.m. London time. So still fairly early today. We've got spot gold, 1470. That's down $1.25. We're right near the lows here. The low's been 1469 overnight, and the high 1475.70. Silver up 9 cents. So silver is doing fairly well. It's up 0.5% at 1712. Range has been 17 to 1720. The Dow is making an all-time high. The Dow futures, it's up 48, 28,081. So up just under 0.2%. S&P making new all-time highs. 31.25, up 4.25. That's the other thing. If the economy is doing so well, right, and the stock markets are booming, it's unusual that the president wants to talk to the Fed chairman, right? If nothing's wrong, why do you need to talk to the Fed chairman? Very, very weird, right? Maybe it's because that old axiom that Jean-Claude Juncker of European Commission said a few years ago, when there's a crisis, you need to lie, right? So maybe that's what's going on. We're being lied about, really, the state of the economy, in order to keep things going, this Ponzi scheme, right? NASDAQ 100 future, that's up 14. Sterling rallied a little bit yesterday. It's up 0.1% this morning versus the dollar at 129.66. The euro is a little firmer at 110.77. And the dollar is unchanged against the yen at 108.63. Dollar unchanged against the Chinese currency at 702.50. Crude oil is back below 57 WTI. It's down a third at 56.92, and Brent is at 61.72, down an eighth of a percent. I noticed yesterday as well, stock markets making new all-time highs, right? That the 10-year yield actually dropped 2 basis points to 181. This morning, it's up 1 basis point at 182, so fairly quiet, the bond markets. Next 3 weeks will be very interesting, in my opinion. Right now, there's not much expectations of a rate cut by the Fed. I think if things get ugly in terms of trade and the economy, and it could happen, we could even see the Fed accelerate their QE, augment the size of the QE of the repos. They could even do a 50 basis point cut on December 11th. Right now, there's a 5% chance of a 25 cut, right? So I think things could unravel quite quickly, and I'm not sure the powers that be are being completely honest with the general public and investors. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, make sure you hit that little notification bell to be notified of all my new videos. You can also follow me on Twitter, Steemit, and DTube. So I wish you all a great day. Take care. Bye.